Hello, and welcome to another update video about HBAR. HBAR continues to be in this sideways range, so overall no change to the wave structure, but obviously also HBAR is not immune to the selling pressure we have seen in the sector in the last few days. But overall, as you can see, we're still holding very stable in a sideways range, which I'm considering a potential triangle. Now with triangles, I often say they are fragile structures, so they are normally not high probability patterns, but it can make sense to track it until it breaks, because it gives us usually a heads up that we have to expect range-bound movement, which hasn't really changed. So that's been kind of the forecast, and the market has completed the pattern. I mean, it is a complete triangle. I can label this as a wave 4, which started here in December. A wave down, B wave up, C wave down, D wave up, E wave down. Could be complete. It could be complete. Now, the invalidation point is where the red line is positioned. The invalidation point to the downside, because a break below that red line at 26.2 cents roughly, well, that would invalidate the wave structure. It would invalidate the triangle. It would not invalidate necessarily the idea that this here could be a wave 4, right? But it would invalidate the idea of a triangle. So in terms of, okay, what happens if it's invalidated as a triangle? Well, there are different ways. I mean, it could extend. It could turn into a more complex triangle. It wouldn't be a problem. It could be wave C is here, wave D is here. And all it means, it will extend, right? Possibly, right? That could be one of the implications, so that wave 4 is then still unfolding as a more complex triangle. We would then still need another lower high and another higher low. So the main implication it would have if we break below that red line is that the triangle will likely extend. But I would call that very unlikely, or it's even invalidated with a break below those previous swing lows from the 20th of December and the 9th of December, around 23.5 cents. Then even the triangle is completely invalidated. Not just the microstructure in the triangle, but the entire triangle. So then we need to consider other options, right? But as long as these two levels are holding, so first of all, that 26.2 cent level, and below that level, these previous swing lows from the 20th and the 9th of December, a triangle is technically valid. Because it's moving in a range, it's moving correctively down, correctively up, and it just is a possible way for a triangle. One more high would still look best on this chart. Yeah, one more high in the region around 48 cents, maybe even higher, to complete this fifth wave of wave C of the larger third wave. But for now, what it really needs is a 5-wave move up followed by a 3-wave pullback on the micro level. Because only if we get some kind of upside move from here, we get some clarity that a low is in. This is too weak. It would be a good signal, would be a break above that internal B wave high that formed at around 33 cents. And a break above the green line at around 33.9 cents. And I think I already mentioned the target for the fifth wave. So at the moment, we just have to be a little bit patient until we get this resolved. This is still a boring sideways range, but we're now at a very important point, because technically I could call that triangle absolutely complete. But without a break, for example, to the upside above that green line, there is no confirmation of an upside breakout. And triangles are very fragile patterns because they're typically patterns of indecision. So a bearish scenario is also drawn, but this will be invalidated, with a break above that. It's the 33 cent level. So that's just a quick update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.